Good weekend to you. This is Doc Severson for the ReadySetCrypto OMNIA Trade of the Day for Sunday, the 1st of August. We'll start like we always do by looking at Bitcoin versus the US dollar. And we have the log chart up here on the monthly chart. Now, this has been my North Star for quite some time. And I've been using Bitstamp. And I've had a little bit of question about the volume that we've seen on this move, especially like, okay, we finally got a bounce. Is this real? And obviously we're going to have extremely low volume for this month because this is the first day that it's been printing. But still, it seems like volume has been tailing off. So what I thought I'd do by first of all checking is, let's check. We're using Bitstamp, and because Bitstamp offers me the longest history of BTC versus US dollar. But let's look instead at Coinbase and see how this changes, and notice what's happening with the volume here. So you really can't make any assumptions about the volume. Notice how the volume in this case for Coinbase, which is obviously the biggest US exchange, is like big, right? So obviously there's no volume here yet for this month, but even July wasn't bad. And this is very typical to see the down volume a lot stronger than the up volume, because the down volume is a result of panic and emotion, whether it's the human retail trader or whether it's an algorithmic. And I wouldn't worry too much about the volume on the up moves, because I've seen this forever in different markets, is that we can get into these up moves that seemingly go forever, and the volume keeps tailing down all the way through. And then people say, "Oh, that's bearish divergence," which it is, but the price keeps on going higher. So I've seen that in several different markets, and I don't really think it's a forward tell whatsoever. So obviously what everybody wants to know right now is this little 3-month bear, is this little mini bear or a cub market over? Is the former uptrend going to resume? Well, that's kind of been my assumption all along, and this is what I've been saying for weeks with you guys, is that, look, rule number one of fractal price action is that larger time frames dominate the trend. So in other words, you're not going to see a monthly trend like this just completely eat it in a couple of months. It's going to take a while to reverse that. So what we have to watch for here is the price coming up to a lower high and then immediately diving underneath there. That would be an epic head fake, but it can happen. The lower high is what I think is the most damaging and unsuspected nasty move that I've seen in charts. And we do see them from time to time. And here's a couple of examples of lower highs that we had along the way here in the 2018 bear. Little bit of the same thing happening back here in the 2019 into early 2020 move, was another lower high setting up, and it just completely flushed everybody out. And that's why we've had such a strong move. Now, there is a limit on everything, and this is why we use fractal energy to determine what's going on here. So now that we're printing into a new month, this is important, is that we're starting to see the energy recover at the monthly chart. And as we drop more of these green candles off the back, we're going to be left with much more of a sideways move or non-linear price movement. Non-linear price movement is a way for a chart to recharge, because it's almost like coiling up a spring, as this was here. Notice how much energy we had into mid-2020. It was an essentially sideways market for several months at that point, even though it felt like something quite different depending on when you looked at it, whether it was a bull or a bear. But high energy like this is that coiled up spring, and that's what led to this massive move. Now, it did throw it into super exhaustion here. Once we get an energy level that's at 25 or below, we have to anticipate a move into sideways or down, or usually somewhere in between there. This one's gone more vertical down, and this is the quicker way for it to recharge. So now let's get to the weekly chart. The weekly chart is showing us some interesting signals here, because we had this range, and this is again what I talk about as being a decision box. And this one's much, much bigger. This one goes anywhere from just above 28 all the way up to 42. And so this obviously is going to be very, very slow to make a decision from here. But basically, it's this simple. If the price is in a range, if it breaks out to the upside, then this obviously bolsters the fact that we're breaking from the range to an upside direction. If it breaks to the bottom side, then obviously we're confirming the current downtrend, which is in this case, lower highs, lower lows. We had an equal low, and so far we're going into a higher high. Now, this is the very beginning of a reversal. Now, making decisions based on trend changes on a weekly chart is at best very, very slow, right? It'll take you weeks before you finally confirm something like that, after which a lot of opportunity, a lot of price movement has moved under the bridge. So this is where we go to the daily chart, and this is a hell of a move. I mean, if you'd gone back 2 weeks ago and said, you know, I'd like to see a price movement from 30,000 or maybe even less than that up to 42,000. I think all of you would say, I can't believe it, I'll take it. And that's exactly what happened. And this is why Checkmate refers to this as a disbelief rally, because there's certain phases to this. This is what we call disgust, right? So you can't even look at your broker statement or your portfolio that's on your smartphone. You just like, oh, I just can't even look at this because I'm so bummed out. And then what happens is eventually, and perhaps the best thing that we can do is to go back here and let's look at this on a weekly chart. We can see, and let's just go to price only. And we're going to just go to a linear chart on Bitcoin. So we had several phases of disgust. And in fact, this is actually a good one here because it's disgust and then it goes into disbelief, like, oh my God, I can't believe this is happening. And then we had another disgust phase. So you have to understand that this is in the context of this entire corrective pattern here, which was its mission accomplished, which is to knock as many retail investors off the chain as possible. So here comes the next disbelief move. And what was the first thought of everybody during that move? This disbelief move, which was into the latter part of 2020. Well, it's just going to die again, isn't it? As we got into like the October timeframe, everybody was like, no, this is just going to go back down to 4,000 again because we're not out of this bear. And then here came the real disbelief. And everybody was standing on the sidelines saying, I'm not going to take the bait on that one. That one's not going to go anywhere. Meanwhile, as I've said many, many times, being on the sideline, looking at a market running away without you being on board is one of the most painful things. And so you try to stay disciplined. You'll say, nope, I'm not going to do it. I'm going to wait for the pullback. And then what happens is the pullback never comes. Here is the first time that we actually had a decent pullback, which was into January of this year. And that was bought hand over fist. And then the next one comes along and that was bought too. And then the next one comes along. And these are finally people that have been sitting on the sideline literally forever, for months, going, well, I'm too scared. I'm too scared. This feels bad. This feels bad. Okay, the next time it dips, I'm going to be all over that. And so they bought this dip at about 50,000 and then comes the lower high. There it is. Nasty. It's a nasty move. Markets will always move in a manner which will separate the greatest number of participants from the largest possible section of capital. This always happens. And it happens to the upside and it happens to the downside. So now we've had this massive move. We're getting into disbelief again. So the disbelief rally, people are sitting on the side going, no, not going to fall for it. It's just a bull trap. It's just a trap to bulls into being thrown underwater. And that certainly could happen. And this is something why we need to watch on this weekly chart. Let's clean this up for a second here and kind of reset. So this could turn into a lower high. And the way that that would happen is bounce up, pull back. Everybody says, okay, there's the pullback. And then it doesn't go anywhere. And it ends up like this. And this ends up creating the lower high. So we do have to be on guard for something like that happening. So great 2 weeks. terrific start. This is a disbelief rally. No doubt about that, because we printed above the most recent lower high in the weekly chart. So this is the beginning of a weekly uptrend. So I'm going to make the assumption that any pullback at this point is going to lead to a resumption of the rally. So how can you trade this? Well, there's a number of ways, and a lot of them depend on the pullback. Breakouts would be good, a breakout about 42, but look how far it's come from. So now this is where we go down to the daily chart. Let's throw on the RSI Laguerre. Let's understand the energies, and you can see that with this rally, which has come from, say, 29,000 or so, that's come a long way. Imagine yourself climbing a mountain, and you want to summit this mountain, which is up here. How would you feel after running straight up 1,000 feet up a hill? I think you'd be pretty well gassed, right? You'd probably want to sit down. Maybe you're even going to fall down at some point, right? So it's the nature will intervene and say, nope, you can't go any further. So you rest for a while, and then you're ready for the next resumption, right? So that is one way to identify it, either through the pullback or the subsequent breakout from the pullback back above the recent highs, which in this case would be somewhere around, say, like 42, 42.5. So that's one way that you can trade this, is just to, based on the price action, look for the pullback and aggressively buy the pullback, or you can buy the subsequent breakout above 42,500. Something else that we can do is to trade the futures on BTC versus the US dollar, or some type of perpetual future contract. And at this point, I think trending to the upside is probably a low probability thing at this point. I think this market, after running about 12, 13 points, 13,000 points higher, might be due a pullback. Now, it doesn't have to, just because I sit there and judge it and like, well, it's got to pull back. It can do whatever it wants to. I'm just saying at the daily chart, a lack of energy means that this is going to chop around either forever, or it's going to pull back very quickly. So continuing to chase after the upside is showing diminishing benefits. You can see the big move here, right? Pullback, much smaller move here, pullback, much smaller move. So it's running out of gas to the upside. You can see the volumes tailing off as well. Okay, so what you can do is you can trade this in both directions, obviously. So if we have this ascending pattern breaking to the downside, you might be able to get a nice entry into a downside move. Now, just remember the downside potential is limited if we assume an uptrend. So all of this is in our futures masterclass, which is on the platform as well too. So you can pick a direction, look for a trend change break or a trend line change break like this, and then look for red candles, look at the energy, make sure the energy is good on 5X, and then just simply look for an entry on the RSI Laguerre as it goes through a down hook. But I would not look to go long unless we get a really good consolidation that brings the daily chart back up again into energy before I look to go long again. Or you can just look for pullbacks, and you're not looking for a great big long swing to the downside you're going to hold for days. This is a scalping to begin with here. So probably only just 2, 3, 4 hours at the most, you're going to stay in a position. The other thing that you can do with Bitcoin is you can trade options on this. Now, this is LedgerX, which is a US only exchange, and you can look to sell puts. Or there's other strategies that you can play. However, I don't think the liquidity is all that great for playing multi-legged positions. So what we can do is right now, since this is the 1st of August, we can look out and see into the end of August, which is a little bit shy in terms of premium, especially with the run up. But we could do something like come out to the end of September. And if you think that the bottom is in on leveraging 30 grand, you'd be earning a credit of 1,060. So this is about a 3.5% return on capital potential. And this is one way to earn more BTC, right? So this is a way to turn dollars into BTC by a couple of different ways in this case. So either you're going to sell the put for 1060 and then leverage that against 30K. And either the price is going to close above or below that level by the September 24th here. So either you're going to just watch that premium disappear and you're going to earn 3.5% for the next, 7 weeks on your capital. That's one way to do it. Or you end up assigned and congratulations, you've got another BTC, which you paid $30,000 for it, regardless of where the price actually is on that day in September. Now, another thing that's possible to do with LedgerX is they now have Ethereum options, which is good because these are a lot more cost effective. It's a much lower price instrument, as you all know. So you can do the same thing here. In this case, if we go out to the Ethereum chart, and we can see that the price held 1,800 really well. Now, again, I like to sell puts on a pullback. I don't like to sell puts as the price is running away because the premium is dropping like a stone. And then eventually what happens is it does pull back and then you're underwater for a while and it still works, but it's just not optimal. So selling into a pullback is obviously the way to maximize your reward to risk. It just doesn't feel very good at the time. But if we want to say sell against that 1,800 level, go back to LedgerX. And if we go out to September 24th, we can see we don't have an $1,800 strike. We just have very few strikes here. So that's a little bit of a problem. But if we can sell against the $2,000 level. So in this case, looking at that efficiency, that is earning about 138. And we're leveraging $2,000 of capital for selling that put, which would be that $2,000 put. And again, you can negotiate a little bit between here, but let's just use worst case scenario of $138 fill. That is a 6.9% return on your capital for the next 7 weeks. So 6.9%, which is, I'd say most people would take that, especially if it's a portion of capital that they've dedicated towards income trading. So obviously a lot more capital efficient, not very liquid markets. Right now we can see the open interest on this is 356, which is not great, but at least we have, I would say, relatively narrow markets there. It's only just a couple percentage points wide, which isn't too bad. So this is one way that if you want to increase your stake in Ethereum, you can do that by selling puts on LedgerX. Now, the one downside of LedgerX, at least the last time I traded with them, is that you have to fund through a wire. So you have to wire US dollars to them through a bank transaction. And in my case, it actually cost me, I think it was something like $50 through my bank to do that. And that's not good. You could also transfer BTC if you wanted to. You can turn your BTC into a way to trade against that, or you can transfer Ethereum, but I'm not sure why you would want to transfer Ethereum in here to sell puts against Ethereum and then be assigned more Ethereum, which, I would use LedgerX as sort of a currency conversion mechanism, if you will, that allows you to turn fiat currency into cryptocurrency. Okay, so just like back to Ethereum here and looking at the energies, great move, terrific move, and even stronger than BTC. So Ethereum has really had a very good year. And if you look at this pullback, it's been very, very well defined by volume profile at 1,800 being sort of the bottom line of defense for the bulls. So that's all good. Again, wait for your pullback or look for the breakout above 2,600. But this one looks really good. If we go out to the larger time frame charts, it looks even better. And the weekly chart is fully charged up. And going to the monthly chart is just now getting into, or out of purgatory, I would say. It is still in exhaustion. Remember, Ethereum had a huge move, and this is a classic cup with handle that was there. So basically, the upside target is the extrapolation of this. As you can see, it went well above that, but we were forecasting about 30,000 or 3,000 on this move, and we got well above that, quite a bit overperformed, overshot, and got us into exhaustion. So range expansion goes to range contraction. This is very normal market looking at this. Now today, I'm not going to really focus on much else of what's going on here, just the top two until we really truly recover from this. But you can see all kinds of green that's showing up today. So the markets are normalizing. Looking at a couple of the recent rock stars, coins that have done well through the correction has been Axie Infinity. We've also had Hex looking good. And what we want to avoid is, I've seen this so many times over the 3-year bear, that things would shoot higher and then they basically just sort of eat it on the way back down again. And this is because people are selling the winners and they're going back into the more conservative top 20 assets in crypto. So nothing else that really catches my eye here in terms of like turning a double-digit gain or anything else like that. So most of them are somewhere is 0 to 5% up or down. And probably Polkadot is the one that I'm seeing maybe strongest recently, but again, into exhaustion and does deserve a rest. But I'd like to see this break this descending triangle or descending pattern here, excuse me, descending trend line that we have. That is a good first start. That should set up to a higher low, higher high combination. All right, folks, I'm rambling away here. This is over 20 minutes long, so it's time to cut this short and wish you a good weekend. And everything looks good right now. And we'll let you know if we get into a situation where we have a potential higher low setting up, which could be a great opportunity, good risk reward opportunity. Thanks and have a great weekend, folks. Take care.